Imagine rolling out of bed, checking your phone, and seeing your sleepy little stack of XRP suddenly worth more than the house next door. Two numbers, one crazy leap, and you're wide awake with your heart in your throat. Right, here's the wild ride that we're strapping into today. An analyst who's lived and breathed XRP charts for years, goes by the name of 𝗕𝗓𝗪𝗧𝗏, just doubled down on a theory that could shove XRP from pocket change territory to 3 digits bragging rights. Now, we're talking about a potential sprint from around $2 to $27 this summer, a kind of brutal detour back to $5, and then hold on to your coffee, a moonshot to $120. Sounds like fantasy, right? Well, stick around because the breadcrumbs that he's following come straight from XRP's own 2017 price fairy tale. And by the end, well, you might even be wilder. Back in late 2017, I was still figuring out how to convince my parents that Bitcoin wasn't monopoly money. And meanwhile, XRP decided to write its own legend. Right? In March of that year, you could scoop up one coin for less than a single cent. About 0.6 of a cent, in fact, right? And if we're kind of being really precise about it. Now, people were literally losing more kind of change under their sofa cushions, right? Now then, before anyone could say bull run, that very same coin strutted around at around $3.80 by January 2018. That's a mind-melting 6,319% explosion in just 10 months. You know, it's like finding a rusty bicycle in your garage and selling it for a Tesla. 𝗕𝗓𝗪𝗧𝗏's claim is simple but spooky. The current chart is replaying that same 2017 tune. Now, he calls it a fractal, just a fancy word for a repeating pattern. So picture one of those kind of Russian nesting dolls. Open the big doll, smaller kind of versions inside, same face, same paint, right? Now, the crypto market loves those dolls. Now, according to 𝗕𝗓𝗪𝗧𝗏's, XRP's move from 50 cents in November 2024 up to $3.39 in January of 2025, well, that was doll number one, wave one in Elliott wave speak. Now, that jump alone was 578%. Maybe not kind of sofa cushion magic, but still enough to make your accountant raise an eyebrow. Then came the cool off. 3 months of sideways shuffling while everyone on crypto Twitter went from diamond hand memes to posting sleepy cat gifs. That's wave two, right? The corrective wave, and a bit where kind of strong hands buy lunch off of the weak hands. Right now, says 𝗕𝗓𝗪𝗧𝗏, that we're actually parked smack bang in the middle of that lull. And here's where things get goosebumpy. In 2017, the lull was the slingshot, right? When the rubber band let go, XRP rocketed another 10 times in 60 days. Now, he thinks wave 3 this time could blast us to $27 by September. $27 doesn't just sound nice, it actually shatters records. It would top XRP's old all-time high by nearly 7 times. Now, market cap wise, you'll be looking at over $1.5 trillion, roughly the size of Google today. And yet 𝗕𝗓𝗪𝗧𝗏 calls that a waypoint, not the actual destination. Wave 4 in his roadmap is the gut-wrenching punch, right? Picture running a marathon, you know, catching sight of the finish line and then being told that you have to do a surprise mud run detour, right? His chart suggests a plunge from $27 all the way back to $5. And that's the kind of moment that my pulse kind of spikes and I start Googling stress relief breathing techniques. Now, let me pump the brakes for just a second. Because talking $1 trillion dreams while we're still arguing about whether a $2.32 coin can close above 3 is like kind of shopping for a yacht before you've actually paid your rent. But that's exactly why this story matters. It forces us to confront the question, could lightning strike twice? And if it does, what happens to the rest of the crypto map? Ethereum at 10 grand, Bitcoin flirting with 500,000. Stranger things have happened, of course. And if you kind of hang out in our free crypto Discord server, there's a link in the description down below, then you're going to know the debate and actually have the ability to debate this stuff harder than Premier League fans arguing over penalties. Okay, numbers are cool, but charts can look like kind of, tests, I guess, if you kind of squint hard enough. So let's kind of unpack the logic that 𝗕𝗓𝗓 is leaning into here. First up, we've got the fractal itself, right? In statistics, right, there's this kind of cheeky warning, right? Correlation is not caution, right? And just because two kind of mountains, they look alike, it doesn't mean that, they were kind of carved at the same, or at least by the same kind of glacier, right? However, fractals, they show up in nature and finance because humans have emotions, right? They have greed, they have fear, they have FOMO, and they kind of tend to pulse in waves, right? This is why I love Elliott wave theory. It's why I put together the whole Elliott wave theory course, which you can find more details about down in the Discord server. Now, traders, they chase green candles, right? Panic on red ones, and then it's just rinse and repeat. Now, if you've been following this channel for a while, that brings us over to Elliott wave theory. Right? It basically says that markets move in 5 big waves when they're kind of trending, and 3 pushes up, 2 pullbacks. Now, during wave 1, this is the optimism kind of returns. Wave 2 shakes out the tourists. Wave 3 is the big fireworks show when mainstream headlines start tossing around phrases like parabolic rally. And then wave 4 is the corrective, we go too far. And then wave 5 is the kind of booming encore, powered by the last surge of the euphoria before reality and gravity tags team kind of the chart back to earth. Now, according to 𝗕𝗓𝗓, we're backstage waiting for the encore lighting to hit. Skeptics argue, though, that 2017 was a perfect storm. Retail investors discovering Binance for the first time, initial coin offering mania, turning every white paper into an instant $1 million fundraiser, and almost no institutional gatekeepers in sight. Fast forward to 2025 and the playground has changed. We've got ETFs for Bitcoin, regulators breathing down everyone's necks, and big banks quietly accumulating crypto exposure behind frosted glass boardroom doors. Does that dampen or amplify the fireworks? That depends on who you ask, right? Some say institutional money brings stability, but caps upside. Others say that it adds rocket fuel once green lights flash. Let's stress test the $27 milestone then. For XRP to tag it by September, we need roughly a 12 times gain in under 5 months. Now, Bitcoin has pulled off similar feats, right, from 5 grand to 20 grand in 2017, so it's not unheard of. But XRP's size today is a different beast. Even doubling now requires tens of billions in fresh capital. So where does that cash really come from? A successful resolution of Ripple's ongoing regulatory headaches would help. Remember, the SEC lawsuit drama has been kind of XRP's giant ankle weight effectively. A decisive win or even a settlement with clear rules of the road could actually flip sentiment overnight. The next angle would be utility. Right, Ripple's on-demand liquidity corridors keep expanding, especially in regions where cross-border payments are painfully slow. Looking at you, Latin America and Southeast Asia, right? Ripple's own 2024 growth reports say ODL volumes shot up 30%, quarter over quarter, despite the lawsuit. So more usage equals more demand for the underlying token. The demand is the kind of secret sauce behind the price. If banks start bragging about slashed remittance costs on morning TV, retail minds are going to wander straight to the buy button. Now, let's talk about the psychological support and resistance. $3.39, January's peak. It's kind of like the ghost of Christmas past haunting every XRP trader's chart. Break above it convincingly and you kind of trigger a stampede of buy stop orders that have been waiting since 2018. Right? That floodgate effect can catapult price quicker than you can refresh coin market cap. Much like what happened when Ethereum cracked its 2018 high during 2021's run. But after that, right, round numbers 5, 10, 20, they kind of act like neon signs in the desert for algorithmic traders and TikTok influencers alike. But here's the spicy part, right? 𝗕𝗓𝗪 predicts a post-$27 nosedive to $5. That seems cruel on paper, but actually it fits the historical rhythm, right? Markets rarely climb infinite staircases, right? They lunge, they gasp, and they backpedal before the next push. In 2017, Bitcoin plunged 40% several times on its way back, or I should say on its way up to $20,000 headline. Ethereum got chopped in half more than once. Having a brutal wave 4 isn't actually that bearish. It's actually textbook healthy. It cools off leverage, it rebuilds conviction, and hands latecomers a second chance. So imagine being emotionally prepared for that kind of roller coaster instead of white knuckling the kind of safety bars. Right? That's why community matters. Now, inside the Discord, we run daily sentiment polls, share on-chain metrics, and yes, poke fun at ourselves when predictions kind of miss by a mile. It's the digital version of shouting across the trading room floor, except with gifs and slightly less coffee breath. Now, if you're not in there yet, grab the invite link. It's in the description down below. The entry price is exactly $0, and we promise not to spam you with token naming contests. Let's zoom out a little further, right? A $7 trillion XRP market cap sounds ridiculous until you recall Apple touched $3 trillion with basically phones and laptops. Right? Money is a popularity contest, kind of dressed up as valuation models. If enough investors decide a thing is valuable, then that decision gets etched in the price, full stop, right? And also in the crypto market, we have to understand that the market cap is very manipulative. It's very much not what you expect it to be. It doesn't represent value. It doesn't represent the amount of liquidity. It only shows you macro level pricing, right? After all, it's calculated from the circulating supply of tokens multiplied by the actual price, which means price dictates the market cap. The market cap cannot dictate the price. It's better to focus on what moves price, which is supply and demand. I talk about this all the time, of course, in the free Discord. Now, Bitcoin at the current numbers, absolutely kind of makes sense. Does that feel kind of, ridiculous? Maybe. But remember, right, markets, they don't have a constitution. They have a liquidity and a sentiment, and both can turn on a dime. Now, here's a fun fact. In 1997, Amazon went public at $18. 10 years later, it crashed from $90 to $35 during the financial crisis. Everyone called it overvalued ebook hype. Now today, it trades 50 times higher, and those early buyers are shopping for private islands. The lesson, right? Trajectories, matter more than the temporary attitude of sickness, or altitude sickness, I should say, right? Now, if 𝗕𝗓𝗪's 5-year Elliott wave script plays out, $5 XRP in 2026 would feel like doom and more kind of like a Black Friday, right? But let's get real. Analysts can be wrong. Fractals can fracture, pun intended, and black swans love to kind of gate crash the parties. But what could derail this fairy tale even more? Well, a hostile global regulatory clampdown sits on top of the list, right? If G20 nations coordinate a kind of choke off fiat on-ramps, valuations everywhere could take an ice bath. Now, that's the kind of technological kind of risk here. If Ripple's network suffers a major consensus bug, trust could evaporate overnight. And never kind of underestimate good old market fatigue. If wave 3 stalls at, say, $10, well, speculators might wander off to chase the next shiny meme coin, leaving XRP consolidation kind of stretching from months into seasons. So where does that leave the average investor juggling a 9 to 5, rent, and half-finished Netflix series? First, you need to know your time horizon, right? Elliott waves are not 5-minute candles, right? If you can't stomach volatility, dollar cost averaging beats all in bets. Second, track catalysts. court rulings, ODL adoption metrics, Ripple partnership announcements. Treat those like weather reports before kind of planning to have a picnic. Third, right, join conversations where confirmation biases get challenged, right, not kind of stroked. Right? Shout outs to the Discord again, whereas we've got bears, we've got bulls, and we've got people who still think Dogecoin is Satoshi's secret wallet. So it kind of keeps things honest. Now, let me share a quick anecdote, right? A friend of mine bought XRP at 30 cents back in 2017, watched it rocket to $3, ignored every sell now text that I sent him, and rode it all the way down to 20 cents in 2019. Right, he started practically kind of, I should say, he practically kind of framed his exit liquidity screenshot as wall art, right? Fast forward to last month, the same friend pinged me again, giddy again, because his stash is kind of finally in the green, right? The mall isn't hodl solves everything. It's that conviction plus patience plus a solid sleep schedule can actually outlast headlines. Right? Markets are messy, but time can be kind to a kind of good thesis. And so right about now, you might be wondering, okay, all this sounds thrilling, but how do I actually tell if wave 3 is kicking off? Well, watch volume spikes on major exchanges paired with breakout candles on weekly charts. Look for Ripple news about kind of big remittance corridors going live, and keep an eye on the broader macro scene. If the Federal Reserve whispers rates cuts, risk assets, including crypto, tend to kind of throw confetti. Technical signals, fundamental catalysts, and macro tailwinds. And of course, when they line up, well, that's when the fireworks feel less like friction. And of course, you could become a paid member of our free Discord server, where we actually do technical analysis pretty much daily for assets like XRP, in which case you would know exactly what is going on in real time. One last piece of nuance here. 3-digit XRP doesn't have to happen in a straight line. Think relay race, not 100-meter dash, right? Regional bull runs, altcoin season rotations, and liquidity cycles will pass the baton. Right? During dead spots, it will feel like watching paint dry. But that's when most people walk away and miss the next leg. So pay attention to the rhythm more than the actual speed. Okay, so let's land this plane, right? We've got a chart whispering predictions of XRP that will channel its inner 2017 child, sprint to $27 this summer, trip over, and then, you know, its own kind of shoelaces, if you will, all the way back down to $5, and then rise like a phoenix in a cinematic way to a draw-dropping $120 somewhere down the road. Right? And the kind of thesis here leans on repeating fractals, Elliott wave theory, legal catalysts, and the very adoption, you know, numbers kind of trickling up behind the scenes. Will it play out exactly? History rarely reruns line for line, but the rhythm is loud enough that ignoring it feels kind of reckless.